Testing, testing. Can you guys hear me? Testing, testing. Can you guys hear me? All right, cool, guys. So I think the sound is actually working now. So we'll go ahead and get started. I hope all you guys are doing very, very good. It's the start of a new trading week. So if you have any questions, please feel free to add them to the chat. If you want me to go over any particular charts, just let me know. What's your favorite pairs? Let me know your goals for the week, all that kind of stuff, man. Let's get it. All right, so I usually start my week off with the DXY. And the reason I do that is because I mostly trade USD pairs. So I'm mostly trading like EUR USD, AUD USD, and pairs like that. Now, if you guys already knew this is a great way to potentially trade EUR USD because DXY and EU are basically inverse pairs and they're correlated oppositely about 100%. So you can get a different view on, for example, EUR USD by looking at DXY and particularly see things that you may not have seen when you were just looking at the one chart. All right, so, oh, my bad. So, all right, let's go to our weekly time frame. Yeah, I wasn't planning on doing the webcam, but I guess unless I have the webcam showing, it doesn't actually record the audio. So yeah, bear with me on that one. But yeah, let's go to the weekly time frame on the DXY. We can obviously tell that this is a heavy bearish downtrend. What was kind of forming here is like a complex pullback. So we started making price action higher lows and higher highs. So the reason I call it price action structure is because we technically did not break the last structure lower high here that led to a lower low here, but we're basically retracing. So what has to happen for us to retrace higher is for price to break through levels of resistance, use it as support, and then push off of it, break through new resistance levels, and so on. So now, as long as we continue maintaining support levels, we're going to continue pushing higher and higher on the DXY. Now, once again, price can push all the way up to this point before it actually breaks structure to an uptrend on this weekly time frame. So what we want to do as, more intraday traders, we want to pay attention to, for an example, places that the market may want to stop at next. All right, so if I clean my chart real quick, what we can see is this long wick wicked off of a resistance level, right? So if we look to the left, we can also see that this wick came down to tap a level. Now, I use zones personally, but just to make this a little easier to see, we can see that price was basically trying to retest the same point with both of these wicks. So what we're going to do is highlight this liquidity with the zone. And then what we're going to do is also highlight the wick liquidity on the bottom half. All right. So basically we're trapping price. We want to trap price from resistance and support. All right. And then basically what you'll see is there basically wicks on the daily as well. So we can fine tune these zones to the wicks on those time frames. And we can also go down to the H4 and we want to see how precise we can actually get these zones. All right. So we do this. And we'll fine tune this zone to about right there. All right, so now if we go back to like the daily or weekly time frame, what we can see is price bounced off of this level of support. And overall, we're maintaining this level. So this was an overshoot, but price pulled right back above this level of support and actually made a nice bullish engulfing. It has so much momentum, it actually gapped as well. All right, so what we can potentially see this market do is continue pushing up to the overall weekly resistance up here. Now, this was our daily support, and this is also daily resistance here. So we need to break through this first. But when the higher time frames start to build momentum, 9 times out of 10, price is going to follow that momentum. Okay, it's a lot stronger than intraday levels. So what we can do is we'll change this zone color to I'll just do, like, for an example, like a black. So that will indicate to me that this is a weekly level. Okay, and then what we'll do is we'll actually highlight this zone here as our next daily resistance, which we're currently sitting at. And going into this week, what we want to kind of do is understand where price wants to head next. Potentially, we could see this zone either be rejected or broken in the next couple of hours. This is the 4-hour time frame. So within like maybe 1 or 2 4-hour candles, we can kind of see what next move that the market wants to make. Okay. So basically, with that being my overall higher time frame analysis, now we can start working down. So what I want to ask myself is, number one, is the 4-hour in bullish momentum or is it in bearish momentum? Okay. So with me asking that question, what I want to look at is the actual structure levels of this time frame. So we can see price pushed up here. We overall led to a new low though. We had a lower high here that led to a lower low, and it's currently been broken. Okay, so with us knowing that it's just been broken, that's letting us know that we now have transitioned the overall momentum to bullish momentum. All right, so price is making higher lows and higher highs, higher lows, higher highs. Now, these are not confirmed higher lows, I would say. This is more of price action structure because price has not done more than a 2-candle pullback since it's broken this high. You can see that this is like continuation patterns, like bullish, bearish, bullish, bullish, bearish, bullish. Okay, so these aren't the strongest levels, but nonetheless, we have broken to a bullish market flow. So what I want to do is highlight this last area of exhaustion on the H4 time frame. And for an example, we could just color this zone blue. We'll go to the 1-hour time frame. What we're going to do is just highlight the wicks on this time frame. So this, now how this chart looks right now, it gives us all the points of reference that we want to use to trade from. Okay, so we know overall higher time frames like the weekly bounced off of support and it's headed up to resistance. We understand that the overall weekly resistance is up here. We understand that daily left is support and is pushing to resistance, is almost tapping it, but hasn't just yet. So these are all indications that we want to keep in mind. All right, so how I would trade this. Number one, in order to take this trade right here, I would need to see a nice rejection forming off of this level. For an example, since, like I said, we're coming off of a higher time frame pattern to potentially push up, I would be watching very carefully on the 15-minute and the 5-minute how the structure is forming. Are we continuing to make higher lows and higher highs, or are we starting to transition into lower lows and lower highs? All right, and the indication on which direction the market will continue pushing is simply by watching our floors being maintained or broken. All right, so we'd want to see something like this in order to keep pushing through this zone. All right, we wouldn't want to see price break previous levels. For an example, our last higher low that led to a higher high on M15 is right here. So if price was to breach this, that's overall showing us that the market is ready to transition and fall to a lower level. Now, this would be potentially that lower level of a retrace. So once we reach this point, that would be potentially where I'd want to see, a break, retest, and follow through of, a trend line to take the trade back upwards. Okay. And basically, once it breaks and retests, you can look for a reversal pattern. It can be an engulfing, a hammer, a pin bar. It could be anything like that. But you're going to look for it off of this zone. Okay. Also, for an example, if you're looking to trade from a daily zone, daily zones are usually the strongest. But like I said, since we're playing off of weekly momentum here, potentially price could come through this zone. Now, if it does indicate that it wants to reject from this level, all you're going to look for is a clear rejection on like the M3 or M5. So once again, it'll be this pattern, but reversed. You'll see price push up into the zone, and then you'll see a trend line be formed. You'll see a break, and you'll see a reversal pattern here. It can be, once again, a hammer, pin bar, whatever you trust, okay? The only one I would say not to take is like a doji candlestick, because that's basically an indecisive candle, okay? So that's what you're going to be looking for at these levels. Now, let's say we break through this. If we break through this red zone and we establish it as support, now what we're going to be looking for is an overall continuation up to this level here. All right, so then we have this range here to trade in between. All right, so with us knowing that information, let's go to the actual charts that we'll be trading throughout the week. So like I said, please mention any pairs you want me to go over. I'll personally be going over EUR USD, GBP JPY, and AUD USD. All right, so let's start with EUR USD. Overall, you can see I had it marked up from last week. All right, so if we go to the higher time frames, we can kind of see how price is reacting to certain levels. Now, price was once again reacting off of weekly levels last week. So you can see overall in price action structure on the weekly time frame, we broke a level of support, used it as resistance, and then we fell, retraced, shot all the way up to a previous level of resistance, and shot all the way back down under about, I would say, 1, 2, and 3 levels of resistance. So this could have been something like a last kiss before a rollover in price. All right, so checking out the daily time frame. So if we truly analyze this price, what we can see is that our last lower high that led to a lower low would be from this push here. This would be the overall like impulse level, right? So the highest point of the lower high before a lower low. So this is a full leg in structure here. Now you can see when price came back up to retest, it could not close past that previous level. And this wick was a confirmation that price could not pass this level. Price shot up about 80 pips and was an overshoot because on this same time frame, the candle closed right back under. All right, so that's a clear indication that price does not want to push any higher. All right, so we got a huge drop, and I believe it was about 100 pips. Yeah, like 110, 111 pips drop on EUR USD. So overall, we're maintaining the bearish structure so far. We are making higher lows potentially in price action structure. So the key with this is just going to be patience and flowing with the overall momentum. We can see that there's a lot of bearish momentum in the market right now. So that's more of what we want to flow with. So let's go to, actually, let me just make sure my zones are updated. So let's drop here on the lower time frames, like the H40C, where this wick reacted from, but this zone is still good. All right, so this is pretty much still valid. So let's just clean up these previous lines. So this is actually where I caught the trade that I caught like 95 pips on. So if you guys haven't seen that video, make sure you go back and watch it. It's pretty crazy. All right, so nonetheless, what we want to do now is analyze price on the H4 time frame. We want to see where is price headed to next, right? So we can see overall, we were putting in higher lows, higher highs, higher lows, higher highs. Once we hit this daily resistance up here, price crashed. Okay, so similar to how DXY was, we kind of got this runaway market right now. This was our last level of confirmed like a higher low point that led to a higher high. So now that it's broken and technically retested here, you can see that we made a new low. So what we want to see overall is, are we going to get a continuation push down to our daily zone here, or is price going to want to retrace? All right, so once again, if it wants to retrace, what we're going to be looking for is for price to create a new level of liquidity for us. So for an example, I wouldn't just be looking for price to come up here, retest, and I'm taking a sell to take it back down. Instead, what I'd be looking for is for price to come up here, and then it's going to create a new rejection for me. Now, what I mean by that is, for an example, we're going to have a bullish candle. All right, so we're going to have a bullish candle that forms under this resistance, and then we're going to have a bearish candle reject from it and close. And as long as it's not a doji, it does not matter how big this red candle is, or in this case, black candle. So let me update the color. All right, so you're going to have something that looks like this. It's going to have, wicks to the top. And once this black candle closes on the H4 time frame, you now have a new area of liquidity. Okay. So once you get that rejection, what you can wait for is for price to push away from it and come back to it. Okay. So it's going to be a zone here off of this wick right here. And once price pushes back up to it, that's where you're going to want to enter from, because now it's a confirmed level of resistance. All right, so to show you an example of that is just to look right here. So we overall have this bearish candle and a bullish candle in a uptrend structure. We have bullish momentum. So if I drew a zone off of this level here, what I'd be waiting for is for price to come back to it and then give me a reversal on the 3-minute or the 5-minute time frame. Once you get really good at it, you can even drop to the 1 minute. All right, so let me show you how this looks, and then we'll break down once again how we would trade it as price is actually forming. So you should really at. All right, there we go. Cool, cool. All right, so here we are on the 3-minute. So this is the highlighted level. So basically, treat this as a zone, this box, and what we're looking for is for price to tap our level and then give us a reason to buy it. So we're looking for overall transition. Now, like I said, I mostly want to see a trend line break. Now you can see these points were kind of high in order to draw a trend line off of. Like for an example, if you're trying to draw something like this, it wouldn't really work. Now you can draw from point A to point B here. And you can see we did get a break, retest, and then engulfings here. But nonetheless, what you can see is that we wouldn't have wanted to buy it until price confirmed that it was transitioning. Now, what I mean by that, as you see, we broke a level of resistance here and it pushed up, but it never gave us a rejection and then a continuation from that point, which means that price was not ready to transition. Instead, it stayed bearish and pushed lower again. Once again, we get a breakout here, but instead of getting a retest and a continuation, we just fall right back into the overall momentum at that time. So in order to stop yourself from taking L's and getting faked out at these levels, what you want to do is wait until price is actually building correct structure, as in if it wants to start going up, it's going to start maintaining floors. Okay, so if we check this out right here, we see we established a level of support, we established resistance, we broke resistance, we pushed up, we made a new level of support, maintained it, pushed up. You get what I mean? So it's almost like a staircase where you're climbing the staircase. It's building these levels to add momentum to the market. Versus over here, we broke out, but we never created a new stair step in order to hold us up at that price. Okay, so hopefully that makes sense to you guys. All right, so we start seeing the staircase. So personally, if you're more advanced and you understand how the market moves and everything, what you can do is just wait for a break, retest, and a continuation pattern to form. For example, we broke resistance, we retested, and we pushed away. Now you can look for an engulfing. This is a hammer candlestick right here. This is a hammer candlestick. There's all these, different formations that you can look for confirmation. If you wanted an engulfing, you could have taken it here. But if you want that trend line break, in this case, you would have gotten a little bit later, but nonetheless, it was still a very, very good trade. So let's just say we took it on the break and retest of the trend line. What we can do is place our stop loss at about 20 pips, like right around here. and then price literally just takes off. And we understand once we leave this zone, we're headed to a higher time frame zone. So I'm going to switch to a higher time frame just so to show a little bit more data. All right, so nonetheless, you see that this trade played out perfectly. So it went up about 100 pips. Now we did have a little bit of drawdown once again here, but once again, it's for the higher time frames. It had to form a pattern to push the overall higher time frames. I mean, it's up to you guys if you want to parcel out. For example, you were up about 50 pips. You could have taken off half your order or something like that, then held the rest. You know, I teach my students a certain way of doing that kind of stuff, but it's completely up to you guys, you know, how you want to do it. But nonetheless, so we'd be looking for a similar situation over here. So instead of looking for, you know, bullish patterns and all that, we would be looking for bearish patterns here. So we'd want to see price forming some kind of trend line, basically making higher highs and higher lows up into the zone. We draw a trend line, and basically once that trend line is broken, it's breaking the trend, right? So once it starts breaking the trend, we wait for a retest and we wait for a bearish reversal pattern on the 1 minute, 3 minute, 5 minute. I don't personally say 15 minute because the candles are just too big. For an example, you can have a 10 pip to 15 pip 15-minute candle. And if that's the case, you know, you're missing out on a lot of pips that you could have caught otherwise. So what I personally do is stick to like the 1 minute, 3 minute, 5 minute. Just start with the 5 minute and work your way down as you get more comfortable. But nonetheless, so you're going to be looking for a bearish engulfing here, a bearish hammer, a bearish pin bar, whatever you want to, like any other candles that you prefer, wick to the top, of course. And once it actually closes, rejecting the outside of this trend line, take the trade with a, I would say at least a 20 pip stop loss. Make sure your stop loss is above the overall zone. So basically the previous wicks high, you want to make sure that your stop loss is above that. All right. Once you get that, you'll literally see price fall away 9 times out of 10. It's really that easy. But basically what we're getting in on is a impulse level. So we're getting in at the highest or lowest point of the next legs in structure. Okay. So our risk is very tight, very small, but our reward can be huge. So for an example, if we're able to catch the next leg in structure, for us risking, I would say like about 20 pips, we'd be able to potentially catch about 110 down to our next daily zone. Okay, and then if price, for example, decides to continue making higher lows and higher highs, breaking upwards past this level that we potentially could see an interaction at, then we simply know that it's headed up to the next daily zone up here. So if we transition on this time frame and we start moving upwards, then we simply trade the momentum. It's that simple. Price only can go 2 ways, up or down. Yes, it can consolidate and move sideways, but you can still trade consolidation. You would just trade the outer limits of it. All right, so nonetheless, that's what I'd be looking for on EU. So I'd be looking for either price to continue down to here, potentially give us a reaction, or for price to retrace, give us a lower high here for another rejection and potentially push lower. Now, since we left the daily resistance up here and we haven't technically made it to a daily support, you know, we could see price finish pushing here. I do potentially see some kind of trend line here. So these are all factors that can come into play. We just want to remain calm, patient, and, you know, just allow the market to show us exactly what it wants to do. All right, so let me clean this chart up just a little bit. All right, so we can actually see, like right now, price is sitting on the outside of this trend line, which is telling me potentially that we may see more downside from it, but we definitely do just want to wait, be patient, and see if price, you know, just shoots back up or whatever. All right, so Jonathan asked, are there certain pairs this strategy works better on? Honestly, no. Like what from backtesting, the only thing that has to shift is your stop loss size. So when you're trading GBPs, it has a bigger range, right? So you just want to use, I would say like a 30 to 35 pip stop loss. Every other pair that's USD, you could use 20 to 25 pip stop loss. Once again, you just want to put it above or below the zone. And then even cryptos, this works really, really well with cryptos. But once again, your strategy has to shift as far as like your stop loss size. With cryptos, you might have to do like 100 pip stop loss or, something like that because they're calculated a little bit differently. All right, so nonetheless, so that would be my markup right now for the EUR-USD pair. I understand that the overall market flow or like momentum of the market is bearish right now. We broke past the last higher low right here on the H4 time frame. So overall, I would be potentially looking for more downside. Yeah. So right now, that would be my bias, and I would just kind of see what the market shows me after that. AUD-USD. So this was actually another really fire trade that I caught. Price was kind of forming. Yeah, let me delete this zone. But price was basically forming this channel. We had a point A, point B, and then it came back to retest point C before it took off. And you can see price just kind of went crazy here. All right, so simply, let me go to the H4, but basically, I used the same exact strategy that I just showed you guys. So basically, I drew my zone off of these wicks because we had a bullish candle shot up, a bearish candle shot down, then a bullish candle close. So for an example, if I put on the replay feature, that closed basically our liquidity zone. It created our demand zone, right, off of these wicks. So now what I'd be waiting for, and let's see if I could actually do it. It might work. So let's see if I can just fast forward it. All right, so basically right now we're just waiting for price to come back into the zone. And we can automatically see prices maintaining a trend line here. So making lower highs and lower lows. Price breaks out. All right, price crashes even lower. Boom. All right, so at this point here, it actually taps our zone again. So that's the number one key. All right, it hit our zone again. We always want to wait until it actually taps the zone. This was too early to get in the trade. It never actually tapped the zone again. Okay, so now that it tapped the zone, let's see what price does. So it made a lower high point here. So now we have a point A. Now point B, we can draw a trend line off of. And then price is maintaining. Let's see what happens. Boom, we get our breakout there, okay? So now we want to see a retest. And see, in this case, it looks like it might have just been too much momentum for the 5-minute time frame. That's why personally I like taking off the 3-minute. So let's check out the 3-minute. See, okay, so that would have been our entry right here. Either one of these, bullish engulfing here or the bullish engulfing there. Either one of those would have been my entry point. Also, do you let fundamentals affect whether you actually enter a position, since this seems like an intraday to swing strategy? I don't pay attention to fundamentals at all, bro. The only ones I pay attention to are like FOMC and then NFP, because I know those can be like sporadic and that they can shoot price multiple ways. So as far as that, like I watch those and I don't really trade them. Like if I'm in a trade, I want to be up at least like 40 pips by the time that news hits. That way I have enough room to make a decision on, if I want to get out or whatever. Basically, how much do you pay attention to fundamentals? I pay attention to fundamentals like 0%. If you're trading the FTMO account, they don't allow you to enter or close a trade between 2 minutes of news coming out. So like You can't open a trade 2 minutes before NFP, and you can't close a trade 2 minutes up to 2 minutes after NFP. All right, if you do, then it violates your rules. So usually I just avoid it altogether, because to me it's like, if you know how to trade consistently and profitably, you don't need to, randomly catch a huge push from news. Instead, you would rather protect your capital and know that you can take that next trade. So for me, if I see like a news like that is coming out, I just either close all my positions, or I make sure I'm up a good enough amount where if like it spikes, basically like I'll be safe. Like this is all a game of preserving capital. You know what I mean? So that's definitely the key right there. And then basically back to this. So we got that breakout of the trend line. We got a retest and then an engulfing here. And we also got an engulfing here. And we created a new level of support that price is maintaining. All right, so those would have been my entries. And once again, that's why I use the 3 minute over the 5 minute, because you get more details in the candlesticks. All right, so nonetheless, let's say that we took the trade right here on the engulfing. Let's say that we took a 20 pip stop loss. And let's just move, or I'll let you guys watch it on this actually. So overall, what I want you guys to pay attention to is how we are making higher lows, okay? Now, once again, this is a bullish, bearish, bullish continuation. So this doesn't count as a confirmed higher low, nor does this one. The last confirmed higher low would be this one right here, which was a 2-candle pullback to a new high here, okay? So as long as price does not breach this point, we technically have not broken structure on the 3 minute time frame. All right, it's currently up 20 pips. And basically you see how price ebbs and flows. So, okay, another thing I want you guys to check out. For an example, a lot of people would have got scared out by price breaking past this point here. There's no reason to get scared by it though, because once again, it was a bullish, bearish, bullish continuation pattern. It's not actual structure. The actual structure on the 3 minute time frame, the last higher low point was here that led to a new higher high here. Okay, so as long as price does not break this point, we're still overall holding the bullish momentum on this time frame. And you can see price kind of swings right back up. Oops. Hold on, let me pause it real quick so I can move the chart. All right, so let's zoom out like that. All right, can you explain liquidity? So basically all liquidity is like wicks. It's places where the market fills orders and moves from rapidly. So I'll go into it more, but I just wanted you guys to see this actually play out like in real time on how you can actually, oh, I switched it, hold on. But I wanted you guys to see that play out in real time on like how accurate, trading this way can actually be. Let me see what happened. All right, so I think it added back all the price action, but nonetheless, like you guys can see price did not come back to our entry point. And you can see that this is the overall point that we got in down here. Price hit our overall higher time frame zone here and even overshot it. It went all the way up to about 88 pips. And this is AU. This is a pair that moves a little bit slower usually. All right, so nonetheless, back to your question real quick before we move on. Can you explain liquidity? So liquidity are the areas in the market that have these long wicks, right? So for example, at this high that pushed to this low, the liquidity was here. This is where the institutions, the banks, the hedge funds. These are where those people get in. They don't trade all this noise in between. They trade off of these levels. Okay, they create these points in the market. All right, so these points where price reaches and reverse from very rapidly, that's where they want to get in. And I would say that basically you have liquidity zones on, H4. You have liquidity zones on daily. You have liquidity zones on weekly. The higher time frame you go, the stronger they get. Okay, so for an example, on the daily time frame, if we just look at how price moved before, okay, so we can see right here daily resistance. If we draw a zone there, and let me change the color just so it's easier to see. So let's do like orange or yellow, and then I'll drop the opacity. All right, so you see that this was a zone, this was a liquidity zone. What happened when price tapped it again? Price fell hard. So as an intraday trader, what if you can get in on the transition of this going back bearish? Okay, that's what we're doing. So we're catching this wick on the retest of our zones on the 1 minute, 3 minute, or 5 minute transitions back bearish. So we're catching that first transition. All right, so by the time other traders like swing traders are getting in, for example, they're getting in down here on a bearish engulfing on the daily time frame, we're already up 100 pips. You know what I mean? So that's what we're doing. And once again, we're taking profits at the next areas of liquidity. You can also call them like supply and demand. It's all basically the same concepts. Okay, so price had this level of support that was created. So when price started falling, where do you think price wants to retest? Boom, back to the demand zone that was created, the liquidity zone that was created. All right, these are all just terms, but nonetheless, all it means is like exhaustion. Okay, the market got exhausted there and turned around. Now you got to think about it. As a retail trader, do you think people with $1,000 account or even $10,000 are really moving the market? You know what I mean? Do you think they're really causing these wicks to be formed? No. Okay, so a lot of times what price is doing is, or I'm sorry, what banks and all the institutions are doing are causing pushes in the market, for example, to take out people's stop losses, etc. And then they get in at a better price and drive the market the opposite way. Okay, so by us being able to understand this and how they move, we can capture the true moves in the market instead of capturing these small movements and overall being, unprofitable in these markets. So nonetheless, price drives to the support again. Where do you think it's headed next? Back up to the resistance, aka liquidity. All right, reverses from the liquidity. We can move our zone now. Okay, so price falls again. Where do you think it's going to retest? Boom, liquidity. All right, price leaves support. Where is it headed to next? Boom, the next place that has liquidity. Okay, so you see the tap, just a quick tap, and the market reverses. That's what we're capitalizing off of. All right, so it pushes back here. Once again, going with the overall flow of the momentum, we can kind of just like trail our zones. So every time I get a new rejection, so for a resistance zone, a bullish bearish pattern closes. And for a support zone, I need to see a bearish bullish rejection close. All right, so nonetheless, price retests, liquidity is in, again, wicks it and falls. We don't have to overcomplicate this. It's a very, very simple concept. So once price falls, we're already in the trade and we can capitalize on the higher time frame moves this way. All right, so does anybody have questions so far? All right, so let's mark up this zone how I would have it currently. So overall, I would have a daily zone here. And then since we broke the previous levels, I would have a daily zone down here. All right, so once again, the reason I did not draw my zones, for example, from this point or this point is because price currently closed candles under these levels. So basically, in my mind, I would think that those levels aren't strong enough to hold price. Could price still reverse up? Yes, of course, but I would wait for that actual rejection to be formed rather than using broken levels. All right, so now what we're going to do is drop to the H4. All right, and then we're just going to fine tune our zone to those wicks on the H4 time frame, and then we're going to do the same thing right here. All right, so once we got that fine tuned, we have a range, a daily range that we can trade in between. So overall, if price has transitioned bearish on the H4 time frame after breaking the last higher low, what way do you think you could make the most amount of pips trading? Of course, it would be with that flow of the market, so it would be bearish. So what we want to do is find a way to continue trading in the overall direction. Okay, so we know that price is about 115 pips away from this daily zone. We also understand that we're at a low on the H4 time frame. So what I'd want to see in order to take a trade is a pullback. And then once again, similar to EU, I would want to see that bullish bearish candle rejection closure. I'm going to draw my zone off of those wicks. I'm going to wait for a retest to that zone, and then I'm going to wait for, you know, higher lows and higher highs to form a trend line, break it, retest with like a bearish engulfing, bearish hammer, bearish pin bar, all that kind of stuff, and I'm going to take it short. All right, and I'll take it back down here. Now, if price does not want to continue falling and it wants to go back up, once again, it will not reject and make a reversal pattern. Instead, it'll break through this zone without breaking the trend line, and it'll start putting in higher highs and higher lows. And if it does that, then I understand I'm looking for overall price to make a new higher low here. I want price to pull back. And at that point, I'm going to look for buy signals to take it up to the next area, which happens to be here. And overall, this will be my trading range. Okay, so always trade objectively. You know what I mean? Don't get stuck into one bias where you're like, it has to sell, it has to sell. It actually does not have to. You know what I mean? You don't have to force it. It can do what it wants to. We make money by flowing with what it wants to do, though. And really, it's what the banks want to do, what the you know, these hedge funds want to do with the billions and billions of dollars. That's what's moving the market. All right, so overall, I'm just gonna refresh this, but nonetheless, overall, I do believe AED USD is still bearish, unless it shows us otherwise during this week. So right now, I really wouldn't have like an H4 zone. It would basically be this same point here until we get a new bullish bearish rejection, and then I would draw a new H4 zone. So right now, my zone will basically just look, or I'm sorry, my chart would just look like this. If you want, like if it helps you to annotate your charts, you can do something like this and just put BOS last higher low. And that can just kind of be a reminder for you that, you know, price is technically in bearish structure. Hey, how's it going, Elisa? Lisa, flow with the market and take what the market gives you. That's the key right there. Just flow with it. And the thing is, like, you don't have to be greedy because you can see the same. Like, for an example, if I entered here and caught this buy for 240 pips, you could have still caught 240 pips even if you personally missed the buy, because price retraced this whole thing and a little bit more. You know what I mean? So it's like the market will always give opportunities. It's all about perceiving those opportunities. You know what I mean? So it's more about like being present in the moment to see the markets as clearly as possible than, you know, to actually try to catch every single opportunity. All right, so that is AED USD. I'll check out GBP/JPY real quick. So GBP/JPY over the last week had this kind of channel situation as well. I was tracking it. I actually didn't trade it. Let's see. When do you use the 8-hour as opposed to the 4-hour? So personally, I use the 8-hour as well a lot of times just to view the market. from a different perspective. 8-hour zones are very, very strong as well. So for an example, if you catch certain levels like this, where the 8 hours at support as well as H4 forms of support, that will give you a higher probability trade, I would say. So I would say like H4 zones, if you're trading them correctly in the right direction, they can be like, honestly, 75% to 80% accurate. H8 zones mixed with H4, like at the same level, could easily push your, profitability of those setups up to like 90%. Now, of course, that's not including human error. Okay, so when you're backtesting this, you're doing backtesting perfectly, right? Like if everything went your way. Now, when you're actually trading, a lot of times we do not trade perfectly. We make errors. We overthink shit. Like, you know what I mean? So take that with a grain of salt as far as like, yes, they can be 90% profitable, but with your human error, it might be knocked down to 50%, 60%, 70%. Like you have to work on yourself and being present in that moment once again to perceive the most basically like the most of these setups, if that makes sense. Like you have to perceive these in their perfect environment, because as soon as you doubt or as soon as you get stuck in one bias, like, oh, this has to keep dropping because it made 2 bearish candles, like look what happens. Price pulls against you. Now are you going to hold that trade? Are you going to mess up your risk to reward? Like there's so many different parts of trading, you know what I mean? But nonetheless, so you can see we had this little channel being respected here. We had a higher low to a higher high. We broke above this daily zone here. Now, let me actually, let's see. So on the daily time frame, you can actually see we made a nice wick to the bottom and we retested broken resistance right here, turned it to support. So it looks like we're potentially going to break through this daily zone here. Now, or I'll say like break through and maintain. Now, since we actually broke through here, I would actually move my daily zone up to this resistance here. And then as far as support, since this candle has not technically closed bullish, I would still leave my overall support level here. All right. So now we can go to the H4 and just kind of fine tune this one. It's almost there, but I'll just make sure it's completely accurate. Sheesh, how big did I draw this thing? All right, so I'm just going to draw a new zone because I don't know how far I made this one go. All right, so now we have our 2 levels of interest on the higher time frames. We know that overall this was an H8 zone as well as the H4. Price is making long wicks, daily close with a long wick. So potentially this could be a level that maintains price for the higher time frames. All right, so overall what we want to see at this level right here is price maintain bullish momentum. So what shows us that price is maintaining bullish momentum? It would be higher lows and higher highs over and over. So we want to continue seeing price putting these levels, okay, and continue pushing us up to a higher time frame structure. Now, our last confirmed lower high was here that led to a lower low. So until we break past this overall level here, we're still inside a complex pullback on the H1 time frame, which means if you take a buy from this level and you ride it up to this level and it's showing strong rejections, it could potentially mean that price is going to shoot back down because it technically has not broken structure yet. Once it breaks this level though with a new high and you have a trade in, like a buy from one of these levels, you would have more of a confirmation that price is going to continue going in your direction. All right, so overall, price action structure and all that is definitely bullish. And I basically just be allowing the market to tell me what it wants to do. I do only like to trade from H8, H4, or daily zones. So for example, if I was to trade this, I would have wanted to get in on this test of that 8-hour zone as well as the H4 zone. I would not really be looking to get in yet right here unless price, made a new higher low point that rejected, and then I got a retest and that break structure and trend line on the lower time frames to take it back bullish. All right, so we can break down what the entry would have been here. And I want you guys to start trying to like spot it yourself as well. Like once I'm going to these areas, but once again, we get a trend line into the area, we get a break, retest, boom, engulfing's right here. Either one of these could have worked perfectly fine. This one or this one. We simply take the trade, place our stops. So this one was, so GBP, JPY, remember we do like 30 to 35 pips. So we can put like a 30 pip down here. You can see price basically established a level of supply, or I'm sorry, a level of support on this time frame at this level. So the level we took our first buy from, price came back and retested 1, 2, 3, 3 times before price actually wanted to take off. And then we also created a trend line on the lower time frames that price was respecting. So we got a point A, point B, and a point C, and then the market never came back as low as it did before. Okay, so if you guys know about trend lines, usually the third tap is the strongest tap as well. So that can be the thing that potentially pushes the market to a new high or a new low. All right, so nonetheless, market takes off. We come back, retest the trend line one more time, and keep going. But as you can see, you know, we were only in drawdown for, you know, a couple minutes at a time. These are 3-minute candles, so this was no more than about 15 minutes. This might have been 20 to 30. This was like 6, and so on. So after that, price pushes up, and we hit over a 1 to 3 risk reward, almost 1 to 4 actually. So we made 107 pips for risking 30 pips. So you would have made about 3.5 times your money on this particular trade. And once again, it potentially could be forming to push up even higher. So it all depends on what you want to do as far as your actual, you know, trade management, risk management strategy to determine, you know, how do you go about holding trades for the long term if it's playing off like the daily or the weekly time frames. All right, so nonetheless, technically, I would say on this time frame, we're still in bearish price action structure because, actually, I'm sorry. Let me do this. So we did break a level of support here, but we also did break a level of resistance here. So technically, price is in a bullish momentum right now because we did break past a level of resistance with this bullish candle. Now, what I want to see is a continuation of levels being broken. Like I said before, if we start breaking past levels of support again, then we're overall looking for bearish momentum. All right, so as long as we can maintain this bullish momentum right now, we can potentially see our idea play out as far as price creating a new support for us to look for trades and then a continuation higher. All right, so I personally don't trade until New York session. I used to trade like London and New York, which is perfectly fine as well. But another thing, like another tip for you guys is don't trade when your pair isn't in session. Now, okay, New York session is a little bit different because since it's the second biggest session, you know, a lot of pairs move during it, even if they aren't USD pairs, for example, GJ. So if you're trading New York session, you can see a lot of momentum off of other pairs, which is fine. But any other pairs, like let's say Asian session, don't trade EUR USD during Asian session. Asian session is known for being one of the slowest sessions. All right. Don't trade Aussie session if you're trading EUR USD. You know, these are all things that can keep you from taking a lot of losses. If you backtest your pair and you figure out the time frames that they move in, for an example, EUR USD, I backtested it and I realized I can literally come to the chart at 10 p.m. PST and find a trade setup for the London session within 2 to 3 hours. And within that window of those 2 to 3 hours, I noticed over, I think I back tested over 100 days. And over those 100 days, I think I want to say like 90% of the setups were in between those two times. Okay, so with that being known, you know, you can minimize your window of trading so that you don't have to risk, you know, going through so many stop hunts, going through these consolidation areas and all that kind of stuff. So just adding simple stuff to your trading plan like that can definitely improve your profitability as well. You'll also notice, for example, at New York Open and London Open, 9 times out of 10, the trades will set up around those times as far as like retesting these daily zones, H4 zones, H8 zones, trend lines, you know, like all that kind of stuff. Everything lines up because remember, the banks and the institutions are running, you know, these sessions. So New York session means, you know, the banks and all that are starting to trade currencies. They're starting to transfer funds, all this kind of stuff. So by understanding how that all works, it makes more sense why, you know, pairs consolidate at a certain time and move during a certain time. For an example, let's go to H1. And then what I'm going to do is turn on this little indicator. So basically all it is vertical line. It's just telling you when certain sessions start. All right, so the gray, the gray is London session. And then the blue is New York session. All right, so what I want you guys to start noticing is how, you know, the session starts usually are either at the high or the low. Okay, so let's do this. And you see, for example, so London was basically at the low, and then New York finished off the reversal pattern to push to the high. All right, so this was a consolidation area. All right, and then New York session retested the high and then fell to the low. All right, so price consolidated at the low. London session took off from the low to the high. New York session was at the high. London session retested the high and pushed to the low. All right, and then once it retested, price pushed up to the high. New York session was at the high and overall retraced down to the low. All right, so the market has an ebb and flow to it. And if you start to understand this ebb and flow, you can keep yourself from taking a lot of losses. For example, why would I trade in between, for example, you know, these hours right here, like after the market closes, let's say like on here, 2 p.m. PST is like 14 o'clock. So for me, why would I be looking to trade in these areas if I see and I backtest and I understand that these are mostly consolidation areas? For an example, look at why would you want to trade in a small range like this when you could trade in a huge range like this? Why would you want to trade in this when you can trade in this? You know what I mean? Why do you want to sit through this when you can simply catch this move or this move? Why do you want to sit and, you know what I mean? So as you backtest and as you start to understand how the market moves, it just starts making more sense to you. So you can backtest this on your own and say like, okay, I know, you know, where I live on the East Coast, it could be better for me to trade AUD USD. So you pick your pair, you backtest it, you see what time it usually sets up at, and then you backtest when it usually consolidates, okay? Once you know when it consolidates, you know when you don't want to trade it. Now, it's different if you're already in the trade and it starts consolidating. For an example, for me, if I caught like this buy here and I'm just swinging it and price starts consolidating, I'm going to hold that trade until it shows me otherwise. For an example, it starts breaking structures or etc. If it does not start breaking structures or anything, I'm simply just going to continue holding that trade. All right, and it swings up and it ebbs and flows and so on. But for example, there's no purpose for me to get into this trade at 10 o'clock during New York session, PST time, because that's usually when the market starts slowing down for the end of New York session. So it just doesn't make sense. All right, so let's check out, let's do this. What I'm gonna do is highlight a couple zones on the H4 time frame. And you guys are going to see with the lines, like how they actually correlate a lot of times with certain sessions. All right, and then we can kind of wrap this up as well. Oops. All right, basically find correlations in the pairs we trade. Yes and no. Like, we do want to find correlations as far as, so it just depends what you mean. You don't want to find correlations as far as like, oh, AUD/USD and EUR/USD have a correlation of 80%. We don't care about that kind of correlation, but yes, we do care about, you know, the correlation of what times the pairs start to move, the correlations of when they start to consolidate, you know, when they potentially could stop hunt, like all these different things, you know what I mean? And that's the thing too. If you master one pair, you can capitalize on every movement that it does. You can also, you know, trade multiple pairs. It kind of all depends on your personality, and it depends on, for example, how much time you have to analyze before you have to execute. So if you're trading a higher time frame, like an H4 or H1 time frame, you have more time to execute on those trades. You know what I mean? Versus, let's say you're executing like me, maybe on the 1 or 3 minute, you know, stuff can happen fast. So we want to be fully present in the trades we're taking. So for me personally, I'd only take like 1 to 2 trades at a time. Like, that's the most I'll be in. No meeting times with session. Okay, yeah, for sure. Yeah, we definitely want to correlate that for sure. So let me just highlight some areas for you guys. So for an example, this was a gap, but that's still a support level. We could have a zone based off of this wick right here. Yeah, let's do this one. All right, so let's just rock with those zones right now. Then we'll go back to the H1. We'll turn this back on. Basically, what I wanted to show you guys is basically when price is retesting these levels, it's most likely at the start of these sessions, or like I would say within the first couple of hours of these sessions. All right, so GBP/JPY, we retested a high that we made in, this was Asian session. So we retested a high we made in Asian session. We could not break it. London session ended up dropping from the high to the low. All right, we retest the zone that we established here, and this set us up in New York session. All right, so this was your buy trade right at 6 a.m. So, or I'm sorry, so this was 6 a.m. open. So like at 7 a.m. we retested this zone. All right, so price also retested during like Asian session, and then we pushed up. London session, we were at the new high. All right, we also had a trend line here where price retested in New York session to give, you know, all the bankers and institutions one more chance to get in before price drove up to new highs. All right, and then once again, we had a zone here. Price pulled back to it here and here. All right, so London session, that's what we're focusing on right now. You see price spiked down into our zone, but could not break through it, instead rejected it, and gave us entries for the next, I would say, like 4 or 5 hours before price ended up pushing to new highs, and overall getting to a new high, then reversing during New York session. All right, London session, look when price takes off. So what you'll start to notice is the momentum in the market comes in at certain times. So if you can just get in at these times before the market wants to take off, you can simply avoid all the consolidation and just catch the actual movements in the market. All right, so does that make sense to all you guys? Do you have any questions? Do you want me to go over anything else? You know, I'm going to wrap this up otherwise. I definitely enjoy doing this for you guys as well. Like, I really hope it's helping you guys out. I do want to see you guys, you know, improve your trading, have bigger risk to rewards. And also, if you guys follow me on Instagram, you already know, but my course right now is half off because it's my birthday weekend. So if you felt like you got value from this and you're ready to, like, take your trading to the next level, you want personal mentorship, definitely look into that. TechnicalGods.com. Trader FX, I appreciate you. Alyssa, I appreciate you. Thank you. Could I analyze gold? Yeah, for sure. I'll analyze gold. Can't wait to see this page blow up. Yeah, I appreciate that. I appreciate all the love. I give it right back to you guys. I'll also be, doing another video on YouTube explaining all the guidelines and all that for the giveaway for the account. I'm really just trying to figure out the best way to go about it because I don't want to just give it to the person and they're not ready and they blow it. So I'm trying to decide if I should structure it where they have to work with me, for example, for a month before they can take the challenge, or if I should just give them the option. That's something you guys can definitely give me your feedback on as well. Awesome, Ryan. I'm glad that it's helping you guys out. Keith, thank you. All right, so let me mark up gold really quickly, and then we'll wrap this up. Once again, we're going to be doing this every Sunday. So for me, like, I like trading gold, but it gets annoying. I don't know why, but like I always get messed up, like trying to calculate the pips and stuff for it. Oh, what happened? Thanks, Fortune. I appreciate you. Okay, there we go. Oh, you're welcome, Jonathan, for sure. Yeah, I've been trading for a minute now. Like, I really have a passion for it. You know what I mean? Like, I really spend a lot of time on it, just learning the art because it's the art. You know what I mean? Darren, thank you. I actually had a great birthday. All right, so let's mark up gold real quick. So right now, gold is kind of like in a free fall from the higher time frame. So overall, what we can do is mark off our last point of resistance, which is up here. And then we want to look to the left. Thank you, Newsom. I appreciate you. All right, but what we want to do is look to the left of where price is now and find the last level of support the price can potentially run into next. So we can highlight like basically all these wicks, and we're going to find the lowest point of those wicks to see where price wants to reach to next. All right, so we just fine tune it basically to the wicks on the H4 time frame down here. We can reset it to take us back to where price is now. All right, so then we just fine tune the wicks on the top, and that gives us our daily range. The next thing, we want to highlight the previous levels of exhaustion. All right, so we did get this little bullish bearish pattern that closed, so potentially we can draw like an H4 zone off of these wicks right here. And then we just fine tune it on the H1. All right, so we can also see, go back to the H4, that this area correlates with the previous low of the last impulse leg in the market. All right, so overall price pushed to this low right here, established a support, price rejected it right here as resistance and pushed down. So potentially, price could retest this level and it could hold because of, this overall confluence as well. So let's check out like the 8-hour time frame as well. 8 hours is definitely very bearish as well. We had our price action structure transition here from bearish or bullish to bearish by breaking support levels. Okay, so overall, I'm definitely thinking we have more downside on this. We could potentially see a pull back up to around this level And if we don't get a pullback that high, the best way for you to potentially get in the trade is, once again, just wait for price to show you a new rejection, an area of liquidity. So wait for that bullish and bearish rejection to form and close. Draw your zone off of the wicks, fine tune them on the H1, wait for the retest of that zone, and then basically you'll start to see price forming those higher lows and higher highs on lower time frames. Draw your trend line, wait for the break, retest, and then take it off of some kind of bearish candlestick pattern, like engulfing, all that good stuff. Thank you, Trader FX. I appreciate you guys. But yeah, so that's what I'll be looking for on gold. Pretty simple. We can check out the weekly real quick. Yeah, the weekly, it looks very, very solid. So remember, once price leaves a level of resistance, where is it headed to next? Now, this does not matter about any time frame. If it leaves resistance, it's headed to support. If it leaves support, it's headed to resistance. So we left resistance, we broke through support, so we're headed to another support. It's that simple. Now, price can find support at like previous broken levels, but 9 times out of 10, the market likes to push the previous levels. So since we don't trade the weekly time frame, we're not really worried about this just yet, but we do potentially see that price can push all the way down to this level. Also, looking at the candlesticks that formed here, this candlestick does not give us any indication that the buyers are coming into the market at this moment. For an example, we have wicks on both sides, and we still had a nice size bearish candlestick body. So I would overall think that we can potentially still push down to this support level before seeing any like interaction that could reverse price too strongly. Alrighty, but nonetheless, guys, I appreciate your time. I'm going to wrap it up right here. Thank you guys for watching on your Sunday afternoons. Let me know what you guys think, feedback, anything you want me to incorporate into the future ones. Just let me know, guys. All right, so enjoy your days. I'll see you in the next one. Peace.